webinar today. As you can see from the title, we'll be focusing on our bank statement solutions. If you didn't know, we offer both commercial and residential bank statement options here at Silver Hill. So we'll be going over each program and explaining how they work and who they work for. You'll be getting a lot of information thrown at you, but don't worry about taking notes. We'll be sending you the full recording tomorrow. So today I'm joined by two of our top experts here at Silver Hill, Greg O'Connor and Joe Altamonte. I'll let them do quick intros before we get started.
Thanks, Alejandra. Hi, this is Greg O'Connor, and as Alejandra said, happy to host you all today, and thanks for joining. I'm responsible. I head up the residential wholesale business here for what we refer to as the Silver Hill Wholesale Network. And I'll kick it over to Joe for a moment, and he can give a brief intro of himself before we launch in.
Thank you, Greg. My name is Joe Altamonte. I'm the AVP of Business Development. I help onboard brokers and spread the good word about our programs, both residential and commercial. And so I'll be walking you through the commercial bank statement program later today. And of course, if anybody needs to get set up or get in touch with your AE, you can certainly reach out to me and I can help you along those lines. So we'll get back to Greg and we'll get underway.
Thanks, Joe. Yeah, so Joe and I both have faces for radio. That's why we are not on webcam today for the webinar. So we'll make it easy and enjoyable for everybody here. But as a launching pad for today's session, we'll start on the simple summary of who we are, and that's represented here on this page. We're one platform, one company with three brands. We face the market as what we call the Silver Hill Wholesale Network, which really encapsulates these three brands: Lakeview, Community Loan Servicing, and Silver Hill Funding. We are later this year going to be rolled under just a single Silver Hill Funding brand, which will simplify the way that we can, face and interact with all of our customers and continue to offer the full suite of products. But importantly here, this page is just to outline and showcase that as one platform across these three current brands, we offer the full suite of product, right? From traditional, agency, conventional, and government loan products to non-agency jumbo and non-QM products, as well as small balance commercial and DSCR, investment property loans. And as Alejandra mentioned, bank statements kind of span both the residential and commercial, asset classes and borrower profiles. So with that, we'll start stepping forward with today's program. Really here, and this is probably familiar or likely familiar to most, if not all of you, right? We'll call this kind of the problem statement as it comes to today's topic. Problem statement for self-employed borrowers, which we'll go through, is income documentation. Right? Many self-employed borrowers cannot or don't want to be able to go through the process of qualifying for, traditional mortgage financing using all of the typical, income documentation like tax returns and pay stubs, etc. So we're going to talk through the bank statement program as the focal point for today. So again, some simple kind of factoids, if you will, and this is probably obvious to some, but maybe not all. Really, 16 million individuals in the United States are self-employed, right? And so today's topic, talking about the bank statement product as a alternative income qualification process, is really designed and focused to support and serve these self-employed borrowers that otherwise, may have trouble. And many of us experienced tremendous challenges, during COVID, and some of that still persists in terms of just the difficulty for self-employed borrowers to become eligible and secure traditional mortgage financing. Right. I think importantly, as this slide represents, self-employed borrowers have been on a big upswing, especially over the last couple of years. And all the statistics indicate that this increase in prevalence of self-employed borrowers will continue, right? All of the information out there is leading to, more and more workers going out on their own, starting up new businesses, continued expansion of self-employment circumstances, which adds additional pressure for those individuals to qualify for traditional financing. So the big question is really around, do you have solutions in place for these borrowers? I think we're going to have a poll question or two here that we'll post out. And Alejandra, I'll turn it to you.
Yeah, so let me launch that first question.
Right, so pretty simple, pretty straightforward here. But are you working with clients who fit this profile? I.e., do you work with self-employed borrowers? I think we have assumptions that most, if not all of you do. But would love you to take the time and just give us some feedback. Helps us with us being able to prepare and present specific marketing materials or support to you all as valued partners of ours.
Yeah, and it looks like many of you are working with borrowers like this. So good thing you're here and learning about the solution. So yeah, I'm going to close it out now.
Terrific. Thanks, Alejandra. Right. So like I said, and one of my famous internal terms here, as I say, I play Captain Obvious really well, but in so doing, or keeping with the spirit of that, we assumed that most, if not all of you, work with self-employed borrowers. You probably have options or aware of the bank statement solution. We wanted to use today's opportunity to highlight and showcase for you at a high level, the options that we have. I'm going to walk through, again, at a high level, the residential bank statement product. Joe will walk through the commercial bank statement product. But really the simplistic question is what is a bank statement program? And I like to think about things very simplistically. To that end, a bank statement loan is really just an alternative way to document or calculate one's income. Right. And so a lot of people perhaps have been, especially on the residential side in the last several years, kind of overwhelmed by, kind of the tidal wave of refinances with traditional full doc loans. That environment is no longer the case, right? With rising interest rates. The positive side, right? The silver lining in that kind of gray cloud that's overhanging the industry today is the bank statement product focused on supporting self-employed borrowers is actually, is actually growing. Right, so I'll share some very simple summary stats just to put it into context, right? So again, number one, who's the bank statement product for? It's for self-employed borrowers. That does not preclude a co-borrower from being a wage earner or adding to the the income for qualification purposes. But before I touch on kind of this simple matrix, I want to kind of highlight some stats that are recent and real-time stats for, at least on the residential product this month. So through mid-June, right, June month this year, the bank statement product new origination volume is up approximately 30% month over month. So based upon the trends in the volume of this product being originated June through mid-month, on a run rate versus last month, May, we're up about 30% in this product. Some of the other attributes, right, in light of kind of the interest rate environment we're in, of the production that's been done this month, the weighted average note rate is running around 7%. So that's the activity level that's being done. So upward volume, right, which is a positive in light of all of the declining volumes elsewhere. The weighted average note rate, these are slightly higher than a traditional agency product, but still very, very competitive in the grand scheme of things. Also month to date, 87% of the bank statement loans on the residential side are for primary residents. So it's owner occupied individuals looking to secure financing for their primary residence. That is the preponderance, as I like to say, of the activity that's being done in the market. And these next couple of points that I'll highlight are really favorable from an originations perspective. The average loan amount month to date, nearly $680,000 for average loan amount on the residential production month to date. Excuse me, it's actually $679,000 at a 75% average LTV with a 740 FICO score. And that's the average production in the first half of June, right? So really favorable, and comparatively with respect to many of the the trends that are out there, a growing trend in this particular segment focused on these self-employed borrowers. On the page here, this provides a very high level, simple summary of our owner-occupied residential bank statement program. I do want to make sure that I call out that there's really three primary mechanisms for you to be able to get all the details, like the full guideline and the full detailed matrix. Number one, you can connect directly with your account executive, and or better yet, know that they will be reaching out to you all as they do regularly to make sure that they're providing you the information, intelligence, and support that you all may need for securing and fitting your borrowers into these products. That's number one. Number two, and you can do this at your leisure, you can visit our website, which is shwholesale.com. And we'll follow up with this stuff, as Alejandra said, tomorrow with the recording and additional information. But you can visit our website at shwholesale.com, and you can download there the full product matrix to see all of the particular details. As I said, this particular page is simply highlighting some of the, kind of the major underpinnings or cornerstones of the product. And then the third option that I'd lay out for you is we are happy to and actually get excited about doing quote unquote personalized webinars for you and your teams to the extent that you want to get into more details and engage in Q&A and the process as well. So I've got one more page before I hand off to Joe, and we'll turn to that page. So being that this is an alternative document or income loan, right? The big question always comes about is, okay, how do I calculate my borrower's income? And we'll call this kind of the stress-free simple process. Simplistically, and your AEs can help you out with the specifics on this, but simplistically, just upload the bank statements to us through our portal. We will do the income calculation for you, and we will turn that back to you. So that you can have confidence and simplicity in being able to submit these bank statement loans with, the income established for your application. There's a couple of other points here on the page, some of which are perhaps self-explanatory, but also detailed in the specific matrices that we talked about. I mentioned, right, the bank statement program is for self-employed, but a co-borrower on the loan can also be combined to be added to the qualifying income. And then some other items, I'll jump down to the last bullet point here on the page. We do allow in our program, other cash deposits like Venmo, Zelle, Cash App, etc. Those are oftentimes excluded from other other investors' programs that they're offering, and we allow those within the eligible deposits for income calculation. The third point here, and this will be my last point, 1099. I would refer to this as kind of a flavor of the bank statement program. And this is a new feature to the product that will be live on July 5th, I think is our target for that, where that can even add another layer of simplicity with respect to the income calculation. And there's additional advantages to take to be available for the 1099 option, in so much that there is a lower quote unquote expense factor that's utilized in terms of the income calculation. So I probably covered a lot of things in a very short period of time here. But I think the things that I just want to recap on real quickly, right? The 3 ways to get more of the details, which I'm sure many of you are interested in. Number 1, connect with your account executive and/or know that they'll be calling you, as they are a wealth of knowledge to support you all in efficiently and effectively being able to originate and fund these loans. Number 2, on our website, so that you can look at and download the product matrix and see all the details in much more granular detail. And again, that website is shwholesale.com. And third, to the extent that you are interested, we will conduct personal webinars with you and your teams, as the case may be. And through that, be allowed to get into more specific Q&A around process and product as well. So with that, I thank you for giving me the time, and I'm going to turn over to Mr. Altamonte. Joe, you there?
I am here. It helps to be unmuted. I'll repeat that and for everybody's benefit. But yes, thank you, Greg. And I'll start the commercial portion of the program by talking about how the same attributes of the borrowers that Greg talked about for the residential program really are the same. So we're talking about the same people. And if you are a residentially oriented broker, this means that you don't necessarily have to go too far out of your network to find prospects. In fact, it won't cost you much money, won't cost you much time, because these are people that you're already talking to or already have talking to. So for those people that may have done a primary residence, they under a bank statement program or that have had difficulty showing tax returns, they could be prospects for commercial properties. They may own them already, or they may be open to owning the ones that they already are renting, or otherwise are looking for properties. So we're talking on the commercial side about owner occupied only, and what that means is their business occupies the property. So whereas we know that to be on the residential side primary residence, here it could be a business, a standalone business, or a business in a building where they own the unit and their business is inside that unit. We go up to $2 million. Minimum is 100,000. That's pretty firm. 2 million, you have something that's a little bit above that. We can take a look at that and decide if we want to, make an exception on those things. So for commercial, and these are commercial properties, which is not overly common to have a 30-year fixed term. We see that a lot on the DSCR programs, but for straight up commercial properties, a 30-year fixed is something many borrowers are happy to entertain. We also offer a 5-year ARM and different amortizations as well, between 15 and 30 years. And we'll cover all loan purposes as well. We like our borrowers to have decent to very, very good credit. So we're not necessarily a subprime shop in terms of our borrowers' capability to pay back a loan. When we talk about debt service coverage ratio, or DSCR, we prefer that the property through its either in an owner occupied sense, operating statements, or the income that the business inside generates, at least be able at minimum to cover the expenses on a 1-to-1 ratio. Talk to your AE about the right prepayment penalty. We have different options throughout the program. So one conversation that you'll want to have with your borrowers is, what their plan is for the property. So instead of laying out the different prepayment options and saying which one sounds great to you, probably none of them sound great to them. So what you may want to ask them instead is, what are your plans with this property? If someone says, I hope to own it forever, then the best pricing comes with the longest prepayment penalty. Someone's in the middle, I don't have a crystal ball, but I hope to be in there for a little bit, maybe you go somewhere in the middle. Someone explicitly says they want to be out in a few years, we offer something for as little as 3 years that they could minimize their pain when they go to get out from under that property. When we talk about a global DSCR, we're underwriting the property through the income that the business generates and then the personal income that the borrower generates through that business as well. So obviously the income documents are self-explanatory. We do allow buy downs, and we can lend either to an individual or a business entity. So that's something that creates a little flexibility as well. In general, we like to see properties in a densely populated areas as possible. It helps from the appraisal standpoint, bigger market from which to draw comps. As you know, there are far fewer commercial properties than residential, and especially as you get into some of the more rare property types, it is harder to find those comps. So if you want to do yourselves a favor when you prospect, is try to keep yourselves to highly populated areas. This profile really applies to both the residential and the commercial bank statement prospect. They're self-employed. That's usually the biggest reason why folks don't want to share their tax returns or just can't, or they don't look good. Also, they want more flexibility. Cash out refinance options, we're actually fairly lenient on a relative basis compared to some of the other lenders out there from a cash out standpoint. We prefer and require through the language in our loan that it is for business purposes, but we don't require restricted, or we don't put forth restrictive covenants or file UCCs, which are liens on furniture, fixture, equipment, and other aspects of the business when it comes to cash out refinances. So keep that in mind as well. Wider range of property eligibility and a longer loan term is available to your borrower. So I mentioned this earlier, Greg touched on this as well, but when we're identifying prospects, I think the best place to start, and the really good news for you, is that you're not going to undertake some grand marketing plan that costs money and takes up a lot of your time. These are the people that are already in your files. So we're talking about small business owners that you've done residential loans for, and keep in mind in real time, have these conversations as they continue to come forth. Oh, you own a small business. I'd be happy to do a loan for you for your primary residence. Talk to me about your commercial needs as well, because I know you own your own barber shop or what have you. So freelancers, oftentimes we've done quite a few loans for folks buying studios, for artists, photographers, and the folks you see listed under that topic. Contractors are a very popular type of worker that takes their, as I throw up air quotes, liberties on their tax returns. And then folks in social media or bloggers or just non-traditional business owners that are going to have a hard time providing additional documentation other than just what goes in and out of their bank statements. So all of these folks are in your current files. Or many of these folks are in your current files. These are great conversations to have in real time as people come across you for residential loans. And these are also folks that you can talk to your referral network about. So keep those options in mind. So let's take a look at some of the pictures behind the actual properties that we lend on. Okay. So office space, right? And I would focus on the bottom portion of these thumbnails as well. So office space in Memphis, Tennessee, a $300,000 loan amount on a 30-year fixed term. If you look at that property, that's something you see every day. Nice, clean property. Same thing with a warehouse refinance for $1 million in Phoenix, Arizona. Probably not something you would drive by and say, I really think I need to take out a loan or to offer a loan on that type of property. But it's something that we do on a regular basis. And if you look at the commission, $20,000, I'll talk about that in a second. That's merely 2 points. So something that a commercial borrower will really expect to generally expect to pay. In Richmond, an automotive shop, $300,000 loan amount, a $12,000 commission. You can do the math on that as well. Another 30-year fixed term. So these are automotive actually is fairly common with us. And look at that one at the bottom, a nice commission, 37,000, but it's a pretty good loan amount as well. That's in New York. Now, keep in mind, from structuring purposes, this is a commercial loan on this page. So we allow the ability for you to make up to 3 points on the front end and 2 points yield spread by buying up the rate. So by that case, that's a potential of 5 points per loan. You're not relegated to your comp election that you may have made on the residential side. So that's a lot of flexibility, and it also allows you to handle this on a case-by-case basis. So you don't have to make the same commission on every particular loan. And I'll hand it back to Alejandro for the poll question.
Yes, so we have, it's time for our second and final poll question. Let me launch that. So yeah, we just want to know if you're currently seeing these types of scenarios. If you are, then our programs here are probably a good fit for you. Yeah, let me give you guys a few seconds to respond. Yeah, so it looks like a lot of you are seeing these deals. So yeah, definitely reach out to your account executive because you could close these deals with us. Let me close it. Okay. Gonna send it back to you, Joe.
All right. Thank you, Alejandra. So why partner with our team? So as I mentioned a minute ago, we offer, well, you have the ability, since it's commercial, to earn higher compensation. So as I mentioned, up to 5 points when you close commercial loans with us. And again, allow a maximum of 3 up front and a maximum of 2 on the back. And my advice to you is to handle that on a case-by-case basis. We have to remain competitive. You, the loan officer and broker, have to remain competitive. So on your borrowers that may have more options, obviously you want to go a little bit leaner. For your borrowers that maybe have run out of options, you can be more aggressive in your comp structure. Another piece of advice I'll give you on that is our YSP, our yield spread, is not disclosed on the settlement sheet, and so you do not have to disclose it to your borrower. But the temptation there is to say, oh, I can tell my borrower that I'm not charging points on this, and so I'm going to make all yield spread. But we do run that global DSCR, debt service coverage ratio. If there's any issue with that, or we have to bring that, raise that DSCR, one of the things we will look at is the YSP on a deal to be able to bring the payment down. You don't want to leave yourself high and dry by us having to bring down the YSP, or even worse, eliminate it in order to make the debt service coverage ratio work. We offer marketing resources as well. So Alejandra is part of our great marketing team, and we can help you with non-branded materials, with marketing advice, and also Greg mentioned our webinars that we can do on a customized basis. So keep that in mind. Don't be afraid to reach out to ask us for our assistance. So take advantage of us. We're a one-stop shop. You can call us in your AE for any residential or commercial loans, and we will put you in the proper hands once you contact us. So let's get started. So if you're ready to submit a loan today, first of all, pat on the back to Greg and myself. But if you're already approved, you can simply contact your account executive and let's get moving. No approval needed. And by the way, if you're approved with Lakeview, you're also approved automatically with Silver Hill. Same thing with folks that are already working with Silver Hill funding. You can call your account executive to get the process going. If you are not currently approved, certainly reach out to me and I can get you approved through the right channel. If you want to do residential and commercial, we'll take you through the Lakeview process. If you're just looking for DSCR and commercial, I can point you through the Silver Hill process. Either way, we can get you, set up to submit loans as quickly as possible. And there's some of our general information. Alejandra mentioned you'll be getting a copy of this deck, and I think my information was on there a few slides ago with how to get started, but we're certainly willing to share our information as well. So wanted to turn it back to Greg quickly to see if we had any other additional color you wanted to add, and then maybe we'll see if there's some questions we can address.
Yeah, nothing else to add, Joe. Thanks for turning back to me. I think, look, at the end of the day, as both Joe and I walk through, number one, our focus here is to be a value-added partner to you all, to help you, with advantageous loan product options for your diversified borrowers, right? We're in the same game, right? We win when you win, so our focus is on developing relationships with you all, fostering those relationships and continuing to be a trusted, reliable outlet and investor for, your diversified products across the spectrum. So, whether it's support and help you need, you can reach out to me, you can reach out to Joe, you can obviously always reach out to your account executive. And as I like to say, they will certainly be reaching out to you, but we're in the game together and, looking to navigate with, ongoing creative solutions. And appreciate your time today and attendance, and look forward to being able to provide more information as we follow on from this.
Yeah, and it doesn't look like we have that many questions. So again, you can just feel free to reach out to your account executive and they'll be happy to answer anything. But yeah, I think that wraps it up. So thank you so much, everyone, for joining us. And I hope you guys have a great rest of your day.
Terrific. Thanks, everybody.
Thank you, everyone.